Hello folks, and welcome to another daily Bitcoin market analysis by Inspocrypto. I was thinking a lot if I should start an initial comment. But about what? About tomorrow? Tomorrow, I have tweeted about that. Tomorrow is going to be extremely stressful because we are going to receive a lot of different data. At the same time, we know that, and that was the main data for today, the CB, consumer confidence in the US, that measures a little bit the consumer spending. They forecasted 109 and declined by 1.9 points. It's at 107.1. So they are spending less money, while at the same time the wages are going up. That's why the services inflation is going up. So partly, not at all. I mean, we have different factors that have an effect to services, but the biggest one is salary. So for tomorrow, it's going to be extremely interesting what they are going to do. I guess, I mean 99.1%, not 7, but 99.1% of market actors said they are expecting a Fed interest rate decision of 25 BPS, so 4.75%, while they are also expecting that 5% is going to be the peak of the interest rate. Means in this year, if we are getting 25 BPS now, and maybe next time another 25 BPS, that's it. The problem here, that's another narrative, because the Fed also said 5% is not going to be the peak, indicating they will rise interest rates in this year more than 50 BPS in total. And that's the big problem. The markets are following narratives that they own construct, ignoring any kind of warnings by the Fed, by the central bankers. Even we know that the central bankers were the problem because of their mismanagement, in my opinion, and because of all the cheap money they printed in the past, we are now in a situation that doesn't look great. It's absolutely, in my opinion, it was constructed by the Fed. However, the Fed is trying to reduce the impact to the monetary system, and the industry or the economy is ignoring it. It looks and it really feels like they are fighting the Fed, are in a battle. The Fed is saying, hey, check your portfolio as a warning. Well, the market, it's ignoring it. Instead, they push up with meme stocks. They push up with, they make money taking into account that they are bringing in a risk, the market maker, just placing short-term options with an average of 6 hours in expiry. That's gambling. And if you check what happened in 1928 and 1929 and why the whole market collapsed, the Fed tried to stop the gambling in the stock market in end of the 20s. And they did that just raising the interest rates more and more and more. Make it loans just extremely expensive. That's what they tried. Because the problem here was just the little Joe went to the bank gave him a loan, and with this loan money, he went to the stock market and placed orders. That's what they did. So the main point of the Federal Reserve end of the 20s was, if we make credits or loans expensive enough, many actors would go away. Well, yeah, they were right. Unfortunately, the whole system collapsed, and we know what happened after 1929. So at the moment, I see that the Fed is is going to have a similar situation right now, because they are trying to fight the inflation, and instead the market is gambling. Something that's absolutely not in interest of the Federal Reserves, of the central bank. Not in Germany or in Europe in general, like for example in the US as well. So they have a really huge opportunity to make a clear statement. In my opinion, if they rise the interest rates by 50 bps, of course, that will bring more stress to non-bank lenders, for example, private equity, hedge funds, and so on and so forth, because they are already underwater, because, well, they need money printed by thin air. That's actually how they build their companies. And yes, it's going to be a big stress situation for the financial sector in general, but at the same time, I mean, the big thing here is they are just counting or expecting 5% interest rates for 2023 anyway. So even if they would decide instead of 25 bps what the market is expecting, just to make and to place a really strong statement to push up 50 bps, doesn't mean that next time we are going to rise the interest rates again 25 or 50 bps, maybe none, you know. But just to make a clear statement, hey guys, stop gambling, because that's another risk that we are constructing. That's a little bubble in the bubble, and please stop with that. We are warning, we are saying you stop with that, but you are not hearing. But of course, if they are really going to launch and to say 25 pps is our decision, that's a little gift to the markets, because the markets will continue doing what they are doing. Short-term gambling, that's what they are doing. Using leverage products like futures, for example, or options. And that's a huge red flag, and the Fed knows that. So the big question is, what will happen? I have tweeted also from Forbes an article where they said, 25 bps, yes or not. It's not the point that matters. The point that matters is that almost all market actors are expecting a maximum interest rate of 5% until end of the year of 2023. If the Fed is going to announce, for example, in the FOMC press conference, and going to say, yeah, we did 25 pps as expected, but, and they communicated that already, but we will go more up than 5%. 5.5, 6%, nobody knows, 6.5, depends if the inflation is going down, hitting our goal of 2%, and we are still far away from 2%. While, as mentioned, services inflation in the US is still going up. Also, I had discussions about that. Many people said, no, you are wrong. No, I wasn't wrong. I don't need to be right all the time, but I wasn't wrong. I was right. The inflation related to services is going up more. And that's a big problem. So we will see what's going to happen tomorrow. I'm really excited about what they are going to decide at the end. If it's 25 bps like everyone is expecting, or 50 bps. And even then be careful, because a half hour after the communicated decision, we will have the press conference. And we need to be extremely careful what Jay is going to tell us. Well, afterwards, we will see. I guess they will bring some volatility back to the market. DXY was front running a little bit. I don't know. Now I guess it's declining again. I didn't check that. Yeah, it's declining and pushing, of course, everything up again. So yeah, we will see. I don't know, but I think the Fed is going to surprise us. Maybe this time I'm wrong and they will just make this gift to the markets, and markets will react like they reacted in the past. And that's a big problem, because, you know, if nobody is taking the Fed serious anymore, the Fed will make decisions we don't like. And that's the problem, where I think it will be now the best timing to make such a statement with a strong economy, with a strong labor market on paper. I don't know if everything is like the data is showing, but because Chicago PMI or was once again low, indicating that the Chicago industry is shrinking, and that's usually, Chicago is a big industry area in the US as well. So, like, I think Detroit. So yeah, that's. I'm not really sure if everything is fine like they communicated, but however, we need to work with the official data, and I would be extremely careful with that. We will see what's going to happen. In my opinion, if they make 25 bps, as it is priced in by the market actors already, it should be neutral. But we know the markets. Maybe they say it's time to push up more. It could be. It could happen. I will be extremely careful with that. Afterwards, maybe they nuke it. So yeah, that's gambling. That's a problem. And that's also a problem for the Fed. And it has a context in the history. And we need to be extremely careful with all of that. While I have mentioned many times why I think that the inflation didn't peak in the US yet, because it's, inflation is not like, how I can tell you, it doesn't come and goes and that's it. Inflation is an effect that happens when we start to have such kind of disruptions in the whole monetary system. And it wasn't only China the big problem. Not only. A big part of it was, absolutely, but not only. And I think, they triggered something that will take time until they can fix that. So I'm not going to say we are not going to see any pivot. I'm not a friend of soft landing. I don't think we will see any soft landing. Maybe pivot, but pivot will happen when we see a deflationary effect. So when consumer spending goes more down, while the people wages are not declining, and so on and so forth. But at the same time, we know, and many companies also mention that, they are going to lay off people. And that's also not in interest of the Federal Reserves. They said that many times. For us is less inflation, strong labor market. A strong labor market is not when the banking sector in the US is announcing they are going to lay off 20-30% of their staff, for example, or Google or whatever. So I think it's not going to be a very easy stuff what we are going to see, not only tomorrow but also in the next month. Let us go and check what the market is going to do, and let us shift directly to our analysis. So the weights ratio, let us take a look what's happening here. A little bit as expected, right? So it bounced. I said yesterday it looks like a dead cat bounce, so it bounced and now declining again. We will see if that maintains. Anyway, still too high, but we can also see that the weights ratio one day it just went down to 46. So I guess soon we will see how it's declining more. And as mentioned many times, usually the weights ratio 30 days moving average has a delay when it comes to to have an impact to the price. But at the same time, it's just indicating they are sending big amounts of Bitcoins to centralized exchanges. It's not saying, hey, we will nuke because of that. It just means they are, preparing maybe just a bigger distribution. It's also possible. It's something we don't know, because I think this time it's different. Like 2021, even like 2020, for example. But all this is something we will see in the next few weeks, I guess. So February, many are saying, hey, February could be extremely stressy for the markets. We will see. The weights ratio, 30 hours moving average. Let me check. Yeah, fine. Well, what we see once again, right? So we let the price go up, and then we start to distribute. That's what they are doing. They are distributing now at 23,130. That's what the weights ratio 1 hour time frame is indicating you. It's also a very useful instrument, but it's a different one. If we take a look, for example, to the weights ratio 30 hours moving average, we can see we are still in an upward trend. While, if we check here, for example, we see that, yeah, we are in a channel, it's going up, but we are even hitting the 90. It will take time to reach the 90. So I guess tomorrow could be the moment where we see the 90. We will see. However, stablecoin reserves on centralized exchanges, that was in October. Then we had here November, and you can see it's declining more. So it's absolutely not indicating everything is fine. It's not. It's absolutely not. So let me check what's happening here. Well, doesn't matter. Okay, we are done here. Let us go to the next one. So if we take a look here and we disable, for example, just the stablecoins, we can see that I can tell you this here is coming from the market maker, because it matches very well. Do you see that? Went up, maintained a little bit, went down, and then pushed up very hard. If we check that with the fund flows, went up, down, and pushed up very hard. So it seems they sent 2,000 to derivative exchanges, and the other 5,000 then directly to, or 3,000, how much was that? 3,000, oh no, more. Yeah, 4,000 Bitcoins just to centralized exchanges, it seems. So if we take a look here, we can see that they sent here 2,500 Bitcoins to centralized exchanges, and also here 400, 1,200, 1,200, 2,000 to 6, 3,000, 5, yeah, almost 5, and right now in the last few hours 1,500, yeah, let us say another 2,000 Bitcoins. So the thing is, at the same time, the balances on centralized exchanges are lifting up, and that's something where it's indicating me they are preparing something. They are, I don't know, I guess tomorrow maybe it's going to be 25 PPS. They will push up and they can distribute while the price is going up. It's possible. We don't know what's going to happen. I did a clear statement. In my opinion, it would make sense for the Fed to make 50 BPS to make a clear statement to the market. But if the Fed is going to do it or not, I don't know. So also related to stablecoins, at the moment nothing happened. To be honest, I like to use more the sentiment flow charts related to stablecoins instead of CryptoQuant. But yeah, we will check that later on. Outflows relatively flat, nothing happening. We had here 2000 bitcoins outflows after we received here 2500. However, we don't see all these here illustrated, means they are, yeah, it seems really holding and accumulating bitcoins on centralized exchanges. Let us go forward. So if we take a look now, we can see that funding rate declined, funding rate pushed up, funding rate declined, pushed up, declined. So at the moment, nothing big indicating. They demanded here longs, then they flipped to shorts, then again long, and right now again short. Okay. While at the same time, if we take a look, open interest went up really crazy, up, down, and up. Once again, extremely up, while the leverage ratio, it's what we see here, it's doing. So open interest lifting up more than the leverage ratio, indicating they are using less leverage and more volume. So if we go and check, zoom out a little bit, we can see what's happening. So we are still far away from November levels in open interest. So yeah, it's not clear to me. I mean, the activity related to derivative markets and spot markets are still in downward trend, indicating more people are leaving, or it seems they are on the sidelines, whatever. I'm not sure what they are doing, but the activity is not rising. It's declining more and more, indicating less people trading. It's fact. It's, at least based on the data, it's fact. If we take a look here, you remember I have said yesterday, hey, 470 millions outflow, and close afterwards we received 300 millions inflow. So close afterwards means 5 hours later, indicating they took profit here from the short, I guess, and then they placed here another long. I guess. I'm absolutely not sure about. Yeah, if we take a look to bitcoins, we received 5,600 bitcoins here to short, it seems, and afterwards they took profit. So 2.5 here, another one, and yeah, well, 6,000 here. Then we another, wow, 5,000 here. Oh, that's huge. Much more outflows than inflows, while the exchange reserves are lifting up. That's crazy. That's really crazy. Red. Huh. Really interesting. So if we go forward, we can see here once again open interest. That's the aggregated. We can see here the leverage ratio, and we see here the funding rate. You know, if we start here, for example, so funding rate lifting up, indicating they're just longing more than shorting, while using less leverage, and open interest coming back a little bit far away from, as mentioned, from its November. We were here, for example, in March, then we went down. That's in June, almost the current level, and then we went up in October, and now we are, yeah, just much lower. To yesterday, with the dump from almost 24 to 22.5, we did $1,500 gap, and we liquidated almost 1,900 bitcoins and longs. Wow, not that bad for 1,500 bitcoin. We did, if I check, when we liquidated 1,900 bitcoins and longs, we did it here, for example. Let me check. That was 4,400 bitcoins and shorts, and that was 19.7 to 21.5. Yeah, so I think it seems that's almost yeah, that was, we can see that because of the leverage ratio, that was high leverage shorts. They were liquidated, and it seems they liquidated yesterday a bunch of high leverage longs as well. So if we go forward, that's now Binance. We can see that on Binance, open interest leverage ratio looks very solid together, hand in hand, pushed up, declined, and is pushing up once again, while the funding rate is just untouched, unchanged, like flat. That's really strange what they are doing. Not really clear what they are doing there, to be honest. So if we go to the blockchain whispers, let us check. Oh, shorts coming back, 1.2 billion and longs, 1.1 billion and shorts, with 53 to 47. That's the long short ratio on Binance related to Bitcoin, and we have here 56 to 44. So once again on Ethereum, it looks maybe a little bit, well, in that case, I would say it looks better on Bitcoin than on Ethereum. If we go forward, let me check if we can see. Oh, I don't have any credits. Oh, Inspo. Ah, Jesus. I just really forgot once again. 38 credits. I just forgot to sub again. Okay. But we can see here what's doing. I had 0 credits just a few seconds ago. Now I have 38. I don't get that, but it doesn't matter. It works. That's the most important thing. So if we want to liquidate quick, fast, then we need to go up. Once again, hitting 23,350. So we are really close to the price, which would go up once again. If we, I mean, as you can see, the liquidation cluster is declining more and more and more. We had 280 millions, now we have 80 millions. Well, yesterday we had 120 millions. So yeah, and you see, I mean, we just need, if we want to liquidate all longs, we need just to go back where we were just a few weeks ago, 15,700. Otherwise, well, we need to push hard, at least above of 34,500. Let me check if we can see also the high leverage positions. Yeah. Also here that, yeah. We need to go up. At least if they really want to liquidate them. So we are done here. Let us go to the next one. So if we take a look here, for example, we can also see some really interesting information. That's here BTC USDT on Binance. It declined a lot, then it pushed up. BUSD, for example, did exactly the same, right now even declining a little bit. And fiat, that's USD, and USD at the moment it seems the main driver here. If we check Bitcoin collateral futures declined and pushing up a little bit. Futures with stablecoin collateral declined a lot and also pushing up a little bit. That's what we can see here. If we go further, that's, well, Binance, that's the BUSD and the aggregated one. We check that, everything is checked. We can see, so the whole market is doing exactly the same like the BUSD and even like the Tether pair on Binance, exactly the same. Everything is doing almost exactly the same. Bitfinex, it's looking a little bit different, but yes, they started to distribute and they are pushing up a little bit at the moment. Kraken, exactly the same, just they are not pushing that much, so they also started here to distribute. That's mainly market trading is mainly used by algos. Not saying that not retailers are using them, and just saying that almost by they are using it, the algos, because it's the from volume and count. So if we take a look here, for example, also doing the same, that's Bybit doing exactly the same, just they pushed up here a little bit, but that's it. If we go further, Coinbase is doing exactly the same like Bybit, for example, also here pushing up right now. We are talking almost 500 bitcoins in few hours. In CBD it's not that bad. Of course, Bitstamp distributed a little bit, pushing up more, and of course, wow, I mean that's Gemini. It's peanuts and volume, but someone just said, hey, I need to push up here. Oh, strange, really strange. 65 bitcoins in volume, and if we check, 34 to 70, so almost nobody sold so just one entity, I guess, just bought everything. So let us take a look. Retailers pushing up because moon and bull. It's going to write history, this bull run, because it's going to be the retailer's bull run. It's not the whale's bull run, it's going to be the retailer's bull run. Sarcasm off. So if we go forward, these guys here, 1 to 10 bitcoins, yeah, maintaining. These guys here pushing up a little bit, 10 to 100 bitcoins. These guys here, well, the tendency right now it's maintaining. The market maker entities declining. So we remember they went here, they received some wallets, 4,550,000 bitcoins, went up by 70,000 bitcoins, and it's now down by 60,000 bitcoins, while sending more and more to centralized exchanges. Let us also take a look what is happening to inflow activity related to stablecoins. Let us check. So we can see related to BUSD, we received 300 millions here, creating the dip, and then 270 millions outflows here. So someone sold, someone started to buy to maintain the price, I guess, and so on and so forth. Let us go forward. That's, for example, Tether. Here nothing happened, absolutely nothing. No, really low volume related to Tether. But Coinbase here buying the dip. Oh no, it's outflow once again. I don't know what's happening. I mean, the blue line, it's outflows, they are cashing out. The yellow one is inflows. Here is exactly the same. Look, that here, that's BUSD, right? That's BUSD. Yellow, inflow, buy power. Blue, outflow. Hey, I sold, I want to go out, okay? So look that here, and now compare it with the USDC. Blue. So someone is cashing out big. Someone is cashing out big. They are cashing out big. Look the outflows. Since we are at 23K, so above of 20K, look what they are doing. While the supply is declining, because they are sending afterwards those USDCs to Treasury to get fiat. Someone is cashing out big. We are talking here 250 millions, and 2 hours later another 130 millions, and 150 millions another 2 hours later. So it's incredible right now. 130 millions, another 120 millions, another 160 millions. So it's really crazy. While, for example, here we receive 40 millions in USDC to centralized exchanges. Someone is cashing out via USDC and at the same time using BUSD. And Tether is not playing a big role here. Well, it's not required, because if they have all Tether already in the exchanges, why not? You can do it, you know. But we are talking here about 73 million inflow, 65 million outflow. It's peanuts. It's really peanuts. But BUSD is not peanuts. If we check that here, I mean, inflow here 306 million, outflow here 270 million. So someone is cashing out via USDC, but not using Tether. And that's the big question. First of all, why USDC? Well, we know, because it's easier to convert USDC and fiat. We know it's baked 1-to-1, and they thought they have a big reserve with fiat and so on and so forth. So I guess the process to convert your USDC and fiat, it's just, maybe that's the key. They are using just another BUSD to push up the price. For example, here, inflow, push up, then sell. So they sell as well, take a little bit of profit, more, push up the price, take profit, push up the price. That would make sense, right? So if we take a look, for example, we can see here a big concentration of BUSD inflows. Price goes up. They started to take profit here. Someone, who knows who it is. So then afterwards, sold more, take profit. Oh, we need to push up once again. Inflow. Now someone is using USDC. And as you can see, I mean, I have shared the axis, so otherwise it would look a little bit different. Means that, you know, they are all in the same scale, and you can see how it looks like. We have here more yellow than blue. If we go forward, and here it's the same shared axis, you can see the yellow is really low, but a lot of blue, indicating huge outflows, less inflows. And on BUSD, exactly the opposite. That confirms a little bit what we are saying since a while, since the whole the whole rally started. That's a BUSD rally. People can say, yeah, well, it makes sense because Binance has the biggest liquidity. Yeah, well, maybe that's the reason, but it didn't happen before. And that's a really strange thing, you know. I mean, it had the biggest liquidity also before. Of course, we had FTX, but I mean, FTX didn't disappear just yesterday. So really, I don't know. At the same time, market maker unloading. Its bottom was at 4,550,000. And we will see if it's going to decline more, because in such case, it's just confirming what I think. The whole thing was a distribution pump, a distribution rally, just to distribute just more. That's the only thing. But of course, we will see. Yeah, we can refresh the site here and check what's happening here, for example. It takes a little bit. No. Yeah, market maker extremely active at the moment, but they are distributing. They are just distributing, it seems. Another 340 bitcoins coming in here. That's really interesting. More outflows than inflows. Still indicating that since we reached the level of 20,000, let us say 21k, they stopped to push up the price with futures, and instead it's almost, I wouldn't say pure, but almost only spot. Also indicating they pushed up with futures, and when they noticed, hey, FOMO triggered retailers are jumped in, they stopped. They give them a last big step to 23k. And yeah, I mean, we can see the angle since 23k, it's pure spot. So they stopped, and now retailers are absorbing their Bitcoins, it seems. That's a nice thing, isn't it? Because we see the inflows, but we don't know what they are doing with these inflows. They can use BUSD futures for it. For example, BTC BUSD on Binance, right? So while USDC, at least on Coinbase derivatives, I don't think so. So using futures, BUSD, push up the price at the same time, of course supporting with spot, but at the same time on Coinbase selling BTC. Just imagine, who can do that? Who is there big enough to do that? Let me think. Oh, I know. We have some people there. Some even people. They generated some red flags in the last few months. I think it's just coincidence. However, let us go forward and check what's happening here. Nothing to see. Exchange net flow indicates it's negative at the moment, but nothing big here as well. I mean, that's our trend. Market activity. At the same time, futures. It's just, I don't know. It doesn't look great. And here something happening. A lot of data. It has to load, but no. Since here, that was the biggest OTC activity we have noticed. Afterwards, we dumped. And since then, centralized exchanges up again. You can see here, once again, we received here OTC activity. Afterwards, the price started to decline. More here, and every time OTC is mainly involved in dumps afterwards. So pushed up, price dumps. Pushed up, OTC activity on, price dumps. Same here. How is that possible? Because big guys are selling and you guys are buying. And that's okay, because that's planned. That's how it works. That's exactly how it works. And we are on track, because history, it is a lie when people say you need to know the history so you are going to avoid to make the same wrong things. It's a lie, because we people, we forget what happened in the past. We are going to do exactly the same. Exactly the same. We are emotional. People show us price action. Push, and we say, I will lose it. 1 billion. I need the 1 billion per Bitcoin. I have 1.5 in my wallet. I'm going to be billionaire. That's what they told us about month. And everybody, I had a discussion with the Bitcoin Maxi. And I have to say, he wasn't that wrong. He said to me, the big problem of Bitcoin is the market, that you can trade Bitcoin. And I said, that's stupid, because that's part of the mass adoption. People wouldn't care about privacy or whatever, Bitcoin, if they can't make money. But he was right, because if you want long-term and mass adoption for Bitcoin, what they are doing is the opposite. Using Bitcoin as a trap for retailers is not good for a mass adoption. So yeah, he is right. But the problem is not who is trapping the retailers. It's not the fault of Bitcoin. It's yours. if you are listening and if you are part of those guys crying and yelling, moon, bullish, and whatever, you know, you can, I mean, the nice thing of Twitter is you can track everything. If you track my analysis from 2021 after July, I have focused what happened July 21st. Then I noticed that FTX bought 75,000 bitcoins and that a lot of whales to profit, because we had billions and billions in outflows. And many people laughed at me and they said, I'm a perma bear, I don't have any sense for this market. And I said, guys, that's a huge trap. I don't know if we are going to make a new all-time high with that trap. But I can tell you, we will go down hard. You can check all. I never remove a tweet on Twitter. You can check that. I have said that many times, and I was extremely wrong when I said, yeah, we will go down to 24K, because at 24K we have still a remaining CME gap. We will go and close this gap. 24K is going to be the bottom. Ha ha ha, 30K was the bottom. We will never ever see 30K again. I was absolutely wrong with the bottom, because we went to 15K, and I tell you, 15K is not the bottom. It's not the bottom. You can call me permabear again. You can try to discredit me. I don't know. You can do whatever you want. I don't care. But what I see, it's not bullish. And I'm not talking only about the data. I'm also talking about what certain authorities are communicating. It's not bullish. However, let us go forward. So, if we take a look here, for example, we can say that on Coinbase nothing happened. Unchanged. Well, the only thing is someone is placing an order at 20,700, a big one, even the biggest one, while removing walls at 19K, 18K, and so on and so forth. But here we have now 300 bitcoins waiting. Let us go forward. Bitstamp, the bullish exchange on the whole crypto space, indicating 19.5 or 19.4, and that's it. We still have a 25K, but nothing big. BTC USDT on Binance at the moment, and careful with any kind of spoofing. We have here a big wall between 23.9 and 24. Another one at 24.3. If that maintains, it's indicating us they don't want to let the price go much more up. But maybe they just want to sell, or maybe it's spoofing and they will remove as soon as the price goes up again, because that's what they also did in the past. So we need to be careful. Otherwise, volume here related to 22,400, and the next big wall it's at 21,400. And well, if we take a look, removing a little bit of liquidity at 15.5 and so on. Now, the main driver, BTC BUSD on Binance. Okay, they want to hold the price between 21,800 and 20,900, obviously. Even here placing a new wall at 20,700, even here 20,500. At the same time, to the upside, 24, 25, so nothing changed. The only thing is here. So that's crazy what they are doing. But yeah, BUSD, everything with BUSD almost, also reinforcing, for example, here 16.5 and so on and so forth. So they smell something. Bitfinex spot, unchanged, absolutely unchanged. Nothing happened. We just have a wall at 24,500 now, but everything else maintains like yesterday. OKEX spot, nothing. OKEX swap is still waiting at 17k. Kraken spot also limiting the way up at 25k, or otherwise reinforcing also 21,500. BTC USD on Bybit, nothing, and on Bybit BTC USDT also nothing. BitMEX limiting the way up at 24,600, but they removed everything to the downstairs. Binance futures with Tether, 21.5. The biggest one will be 22,400, and at the moment limiting the way up with 3,400 bitcoins in shorts at 23.3. Yeah. So otherwise nothing. They removed a lot of walls there. Now BTC BUSD, they removed all walls to the upside, and we have a wall to the downside 22,500 and the biggest 21.5, and that's it. Yeah. So of course, if BUSD is still leading the price, it seems we will go up, I guess. BTC on Bitfinex still here, trading 22.4 and 24.2. Kraken futures, nothing. OKEX futures, similar to Bitfinex, 19.2 and 25. And Deribit, last but not least, and Deribit is extremely bullish. They are here limiting 20k, 19.5, 22, and also limiting 24. And we have also a wall at 23.5 at the moment. That's what's indicating. That's it. So let us go to the next chapter.